Let's talk about year end. We know there's a lot that could change, but from your standpoint, what do you see setting up for the end of the year? How do you see this year going out?
I know this is a little bit of a cop-out, but the election result really will help dictate what the next iteration of the trade and the economy and markets look like. And I think that's rare to say, but the disparity between the candidates, the plans that they're looking to kind of build in are so different that it really matters. But I think between now and the election, as I've stated, I'm expecting down markets, risk-off environment, concerns about over-earning for equities, and an uncertainty-driven slowdown here for the consumer and for companies. And so I would expect, asset prices to fall between now and the election. And it'll probably create an environment where volatility is extremely elevated for the election, kind of similar to what happened in 2016, where vol was extremely bid for that day and night. And people thought, well, if Trump wins, it's going to be market disaster. And really what wound up happening was he won and vol got sold aggressively. And so markets were able to levitate and kind of we were off and running. We could be in a very similar environment again, where volatility is elevated into the election and Trump wins. And we have a sizable relief rally based on a view of more of a pro-business, lower tax regime. But he's also, the deficits are going to grow under either one of these candidates. And the dollar is likely to weaken under both. And so I think we could be in a situation where bonds really start to weaken to the end of the year, and we can have materially higher long end yields for 2025, right? I mean, basically been running kind of 6 and 7% of deficits, GDP of deficits for the US. Those numbers are going to grow if we have a slowdown. And so the long end of the bond market to me is of great concern. I think down here at the 10-year at 4% or so is way overvalued. I see a much higher yield environment for the long end in 2025. I think we'll have a decent curve steepener, but that relief rally that comes in November or into the end of the year might get returned back down as we head into 2025 if we're faced with a higher interest rate environment, a still slowing economy, a Fed that's cutting, but it's not really doing much to stimulate demand. And look, if Trump comes in and we have tariffs on China and retaliatory action by China on the US, I mean, that could be a dicey setup. So I don't know. It just seems like we have a situation where it's kind of down now, maybe a relief rally into year end, and then walk in 2025 and things don't look as great anymore. And then the other thing that could happen is if the dollar really starts to weaken and commodities find a floor and start to move higher again, then we have a situation where we're looking at a reacceleration potentially of inflation, call it, second quarter or third quarter of next year. And then what happens? And then how much more cutting can the Fed do? And if we really start to lose the dollar and lose the bond market and commodities start to move up again, then we're in a really tricky spot. So I'd say, again, bearish, then a relief rally, and then probably more concerns in the first quarter of 2025 as we have to really digest whatever the new administration looks like. How much of a slowdown did we have? How aggressive was the Fed in cutting? And whether or not inflation starts to come back again next year.